even if you bought a house and then, the last couple of years, you'll have some equity, most likely, depending on
Yep.
where you live in that house. So you can have that. You can kind of get started with this depending on how much equity you have pretty much right away for most people.
Absolutely. And furthermore, if someone doesn't have the equity to go and tap right away in a home equity line of credit, obviously I mentioned you could get a PLOC, a personal line of credit. You could get a BLOC, business line of credit, that'll do the same thing. Or you can use an emergency savings fund or sinking funds or a discretionary fund that you have. Could be called an opportunity fund. And this is the caveat. I'm not proposing that people go sink all their money in, right? There ought to be an amount of money that you have available and accessible to you all the time. But if you've got 5 grand in addition that you won't touch right away, we could turn that into the shred fund and make it work. And over the course of, call it 60 days, 90 days, 120 days, you'll have more than enough equity that you could then go get a HELOC to fully engage the system.
I love that. So it's really accessible to most people within that situation, and you could probably get some of those loans even without having a mortgage and some equity on that. So along those same
Absolutely.
lines, can you utilize the shred method on other types of debt, things like student loans, maybe credit card debt or auto loans?
You absolutely can. In fact, we encourage people looking at if you have significantly high student loan debt, if you have a car loan that I mean, car loans are a little bit different situation, Andrew, because
Sure.
most of them, right? If you've gotten a car in the last 6 to 12 months, interest rates were like 1.9%. They've obviously gone up since then, and when this recording will come out. But what we attempt to tackle are the higher interest debts first that have some significant payment. So that could be a student loan. It's likely going to be a credit card. But when we go after those, what we're doing is we're shredding the debt and we're freeing up whatever the monthly amount that was being paid on that debt.